Welcome back, friends. We're so excited to have you here. And for those of you who are new, on this channel, you are going to learn about how to break through your finances. I'm Viorica Wakelam, and today we're going to be covering how to choose the right kind of life insurance and how to protect your family. Now, before we move on, make sure to hit that like and subscribe button, and don't forget the notification bell so that you can get all the tips and tricks to be notified when we move forward and download all the cool things for you to learn to break through your finances. Now, the first topic we are going to be talking about is why life insurance. Why is it so important? And a great way to think about it, we're going to reframe things when we talk about life insurance, because oftentimes when we say the word life insurance, it kind of has a weird ring to it. So we're going to reframe it by saying the word income protection to kind of relate the two. Because really, life insurance, all it is just protecting your income. And the purpose behind protecting your income is just as it sounds, right? It's to protect in the event that something were to happen and your income disappears. So let me give you a scenario just to help you process through what that looks like. Let's say, for example, you are a working spouse. Two people that are working in a household together, or if you're just a stay-at-home mom and you have a spouse that's out working. When you go to work, typically you go to exchange your time for a paycheck, right? And that paycheck, what does it do? It funds your life's events. It puts a roof over your head, so it pays for the home that you live in. It puts groceries on your table. It pays for the car that you drive to get to and from work or to go see friends or social events, things of that nature. It funds your cell phone if you need to call people or stay connected, things of that nature. Your income is what supplies your life, the life of your, spouse, the life of your children. That income is what allows that to move forward and to help supply you in your daily activities. What were to happen if, heaven forbid, one or even both of the income earners in your household were to no longer come home? Whether it's a heart attack, like crazy things like that. We're adults here, right? So we understand that tragedy does hit and it's unexpected. It's not typically something that we plan for or prepare to no longer come home. But in the event that something like that were to happen, what is the number one thing that then disappears with that loved one? Well, it's the income that they produce. It's the income that they brought home to help fund those things that allow our lives to move forward day by day. And so being able to protect your income is dramatically important in the context of keeping everything afloat and having the quality of life that everyone is fighting for, that you are fighting for. So protecting that income is super, super important. So essentially that's what life insurance is. It's just protecting that income in the event of an unfortunate circumstance or situation that income were then to disappear. Because really, when you think about it, life insurance is not just an important bill. It's not just an important part of your budget. It is the foundational part of all things financial when it comes to your financial household. It should be the number one bill you pay, because in the event that something were to happen, every other bill is contingent upon that income coming in. So having life insurance is foundational for your financial success. All right, now tip number 2, let's talk about the 2 different types of life insurance policies that are on the market today. There is term and then there's whole life. Now, let me help you understand whole life, because whole life basically goes by many different names. They go by names like whole life, variable life, universal life, be your own banker. I'm sure a lot of you have heard that. That's all a whole life policy. And the way that you can identify a whole life policy is pretty simple. If we're just going to simplify it, I want you to understand this one thing so that you can understand whether or not you own one of these. A whole life policy, essentially all it is, it's the coverage if something were to happen, but then there's the added bonus of a cash value attached to it. So a cash account or a savings account or however you want to view it. But if there is a cash account attached to your coverage, to the death benefit, then it's a whole life policy, no matter what name it goes by. And whole life policies essentially, or permanent life policies, essentially the way that they work is that they have, three different components that are factored into it. A whole life policy typically is much more expensive than a term. And the purpose of that is because it's funding two things. It's funding the cost of insurance, so the death benefit, but it's also going to fund the cash account or the, cash value, the savings account attached to it. So you're paying for two things. The second portion of that cash value policy is that it accumulates inside the cash value. It accumulates some funds that unfortunately most people don't realize don't actually start to accumulate into that policy for about 3, 4, 5 years, sometimes upwards of that. And so what happens is you're paying for two things, but the person themselves doesn't know how the money is being divvied out between the cost of insurance versus the cash value. Let's just say if you were to pay $100 for that policy, you would think that the cost would be split directly between the two. It would be split between the death benefit and the cash account, but it doesn't actually work that way. Each company decides how they're going to factor how much they put into the cash value versus how much they're actually paying for the cost of insurance. And so those are some things that you want to look for in that regard. The third thing with these types of policies is that the cash value policies, the whole life policies, is that when you want to withdraw some money from that cash account, you actually have to take it out in the form of a loan. What? And so you don't actually get to just take that money out if you want to and use it unless you intend on paying that money back, and or if you choose to not pay that money back, or if you can't, they just start to reduce the death benefit. And so essentially you end up owing them back. And then the third portion of these policies that are not so favorable, if you're asking me, like my personal opinion, not so favorable, is that if for whatever reason something were to happen and you were to pass away, your beneficiaries don't actually get to keep that cash that's accumulated into that policy. They either get to choose the death benefit or the cash account, whichever one's greater. And typically it's usually the death benefit, but the beneficiaries don't get to keep the two things that you've been paying for. So the whole time you're paying for a whole life policy or a permanent policy, in the end, if something were to happen, you either get to choose one or the other, but you don't get to keep them both. Now with a term policy is just like it sounds. It's for a period of time. It's significantly cheaper because you're not paying for that added cash account attached to it. You're only paying for the insurance, for the death benefit. And so it is much, much more affordable, much more less expensive because of that reason. Now, it is for a period of time, so it's not for the permanent. However, it is designed to get you through those income-bearing years where you are having to trade your time for an income at a job to get you to retirement. And so that's the two ways to look at the different policies that are on the market today: a term policy and a whole life policy. And as you can tell, I'm a bit favorable to the term life, right? I don't think that the value exchange is meant to be for the whole life policy, but I want you to understand the difference between the two. Now, in a later video, we will definitely go and describe in detail the difference between term and whole life, but for now, those are the basics between the two different policies that are on the market today. Okay, step number 3, how much coverage do you actually need? Now, the general rule of thumb, it should be anywhere between 8 to 10 times of your annual income. Now, I know that sounds like a lot, but let's just look at it from a practical standpoint. If something were to happen, let's just say, for example, we're going to go back to the stay-at-home mom. If you're a stay-at-home mom and you have children at home and the working spouse ends up passing away and no longer providing that income, at the very least, you want to be sure that you can pay all the necessary expenses. So for example, a home, right? You have a roof over your head. You want to make sure that your children can stay in that position, right? Where they keep that roof over their head. And the idea is that 8 to 10 times of your income, it's really to think about it from the fact of when your children are school aged and they are going, through those anywhere between 0 to 18 years of age, that span of life, you want to make sure that you can still provide the things that they need, whether it's education costs, whether it's sporting events, the basics of paying off some debt, keeping that car funded, having those cell phones, and being able to have that roof over your head. And really, when you think about just kind of the rising cost, here in Idaho, where we are, the median household, right, costs about $500,000. I'm not sure for where you're at, but the idea is that when we're looking at the cost of life insurance, of how much coverage we should have, we really need to be taking into consideration the different type of expenses and what we have going on for our family. So 8 to 10 times the amount is the rule of thumb of what we look for. Now, step number 4, we need to be paying attention to when. When is the right time to buy life insurance? And really, I think it's a very simple answer. It's just as soon as somebody else outside of yourself is dependent upon your income. Now, obviously, if you don't have any dependents, if you don't have a wife or children, you may just have a family member that depends on your income or that you'd like to bless. So in circumstances like that, that would be important too. But primarily, the time when we think about when is it important to start buying life insurance to protect our income, to protect ourselves, is the moment that we have dependents, anybody else outside of you depending on your income. But what you really need to pay attention to is that when it comes to life insurance, it's not something you can just go pick off the shelf and get if you want to. Typically, there's a qualification period. There's an underwriting that comes with it. In other words, you have to qualify. And so the younger that you are, the less likely that you are close to passing away, right? The comorbidity factors are less. And so anyone in that phase, it costs you much less when you're younger. And so you want to take those things into consideration. As you age, the cost of insurance goes up as well. And so you want to really be paying attention to, hey, the younger you are, the more affordable it becomes. The older you are, obviously, you start to accumulate different health issues. Maybe you've had different factors in your life that then increase your rates. And so it becomes much more expensive for you. So ideally, the sooner you get it, the better off you are, because the chances of getting a really good rate at a super low premium is very likely. The longer you wait, the more expensive it becomes, and then you put yourself at risk at not being able to get coverage, or if you do get coverage, you get rated, so it becomes super, super expensive. So starting sooner is always better, keeping in mind that as soon as somebody else depends on your income, get yourself protection. And then recognize that as you move forward from there, you can adjust things as you go. You can add more coverage, or if you're older and you no longer have dependents, you can drop some coverage. It's not a one size fits all. However, the one factor I want you to keep in mind that is crucial is that it's all dependent upon your health and your age. The rates are your health and your age. So the sooner you get it, the better off you'll be. And tip number 5, you want to customize your policy for your family's financial needs. Now, when it comes to getting a policy that fits your family, first and foremost, you want to make sure that you're talking to an advisor, somebody that really understands your family's financial situation, things that you want for your children or your beneficiaries long term, whether you want to build that into your trust or your will or whatever it may be. But just make sure that you're talking to somebody who understands what your family's needs truly are and what you want to do, right? How you want that policy to work for you. There's different ways of customizing your life insurance policy that fits you personally for your own family. Like, for example, if you are, a older grandparent and you want to add some, beneficiaries to your policy, like having an add-on of having your grandchildren on that policy, you can absolutely do that. Or having a terminal illness rider on there, if in case something were to happen, heaven forbid, and you get a terminal illness like a cancer or something of that nature, and you need to use some of that policy while you're living so that living benefit. Whatever it is, you want to make sure that you can customize it and have it fit your family specifically. So tailor it to your needs. But again, just make sure that you're talking to your trusted financial advisor who can really help walk you through those things and get you the policy that fits your family perfectly. Because again, it is not a one size fits all. It's whatever works for your family and your financial needs. All right, friends, now that you've gotten 5 tips on how to choose the right life insurance to protect your family, make sure if you're looking to find out a little bit more detail on term versus whole life and which one really fits your family, make sure you check out our videos and we will go into greater detail as to what that looks like. But for now, if you are in that place where you're wanting to protect your family and wanting to figure all this out, make sure you drop the word protect in the comments below, and we will absolutely be checking that. But until then, keep breaking through in your finances.